Tumwambie Bwana, oh haleluya, tumwambie Bwana asante. Tumwambie Bwana asante. Oh haleluya, Bwana asante. Haleluya, haleluya. Amen. Amen. Tunawaweka mikononi mwako. Wanaposafiri Bwana, walinde na uwatende mema. Na ni katika jina la Yesu Kristo tuomba na kuamini.
Mniangalie vizuri, kila mtu aniangalie vizuri. So we're picking it random, and then I'll be giving you one of the three. I'll either tell you to give us a plus, a minus, or something interesting about yesterday. And I'm going to be in no specific order. So I point at you, and then I tell you plus. I point at you minus. You get me? Yeah. So when I point you, the one I tell you to give is the one you give. Are we together?
Yeah. Yesterday was actually getting to look at the other cooperatives, the Arismendi, the one in the United States, the way they do things. Then we got to find out that there are some decisions that are made by the board. There are some decisions that are actually supposed to be ratified by the members, and there are some decisions that it needs an input from the manager. That's okay.
Cooperatives, our bylaws do not have to be the same. Also, our decision-making process does not have to be the same.
Very nice. Tumpatie power.
In our cooperative, workers are held accountable to the manager. Then the manager is held accountable to the board.
Thank you. Tumpatie power.
About cooperatives, there is cooperative rights and responsibilities. Where there is a right, there must be a responsibility.
That's a plus. That's a plus or a minus?
Minus.
It's a minus?
Yes.
I'm taking responsibilities.
From yesterday, as much as there are policies, there are decisions that are stipulated in a structure of a cooperative. Some of the decisions will require the input of all the board members, the employees, and the other like the manager. So it's something that will need to be updated every time.
Thank you. Tumpatie power.
For us, at least inaonyesha that tunasoma, si ndio? Tunasoma. So now I believe that the energizer will come later in the day, na pia our welfare atakuja later in the day kutuambia penye tunaenda kunyia chai yetu, and our lunch, and tukiwa na shida ya wifi, tukiwa na shida yenye zina deal na welfare nini, just consult her, and I believe that she'll have solutions to your problem. Na kama hana atakuja kwetu, and I believe that we'll just figure out a way to make sure that things run as they
make sure that we can get started, and our day is officially, or rather we are given permission by the cabinet to get our day started. So I think without much ado, what we'll do, let me give Mike some two minutes or three to the way forward after that. So Mike.
Morning. Yeah, I think before I make quick remarks, today we are joined by additional officers from the county. I think we have Monica, and so Monica, maybe you can say hi quickly, and then
the latecomers. Apologies, I was not with you yesterday. I had a barrier to attend to. Nasi tunajua barriers are a big deal in Africa. Yeah, so sikukataa kuwa na nyinyi, and I hope leo tutashirikiana pamoja. Asante.
I'll give you like 30 seconds. Behind wananchi ilikuwa bo? Bolo. Doboche. Malizeni tu, hakuna haraka. Aya. If your group mmemaliza, you can raise your hand just to confirm the ones who are done, so that we do not hurry up the others so much. Okay. Okay. Let me give you 1 more minute. Aya, sasa naona watu wanacheka, meaning tumemaliza eh? Aya. So I'd like us to continue. Deboche, tuko sawa? Bado kidogo? Mko sawa? Okay. All right, now I will request now we continue. Do you set wages, for example? How do you determine how you pay your members? And also dividends. How will you divide the surplus at the end of the year in case you get it in a worker cooperative? So hopefully you should be able to do that. Then another thing we look at are decisions about growth, number 2 or 3. And what is the financial consequence of having that extra member? So hopefully those 3 things we should be able to understand by the end of this module. And of course, understand the relationship between pricing, wages, and growth. Because as usual, we'll do a group activity to sort of just solidify and gauge our understanding of what we've learned. So the group activity will be quite practical and a real life example of some of the decisions in relation to wages, dividends, and growth are made. Sawa sawa. So feel free as we go ahead, in case you have some queries, usibaki nayo, uulize hapo hapo ndo tuweze kuelewa tukiwa sote. Are we together? Yes. Yeah, sawa sawa. On power. Sindio? Yes. You've done something on people? Okay. Have you done anything on information? Not yet, eh? Okay. So today we are going to be focusing on the money corner poster. And by money, one of the major things we know is that for members, one of the major motivation for them need to give it back to the members and also choose ways to reinvest into the business, yeah? So that's another thing. So ideally, for you to just control and grow the cooperative, you really need to manage the financial return you give your members, yeah? Now, I'd like us to ask ourselves a few questions. It's just, how does money flow to members in our cooperative? Pesa inaendaga aje kwa watu? Kuna guesses? Okay. Naona wananchi. Wages, eh? So that is one of the ways money flows to members. What is another way money flows to members? Dividends, eh? Another way? Bonus. Meaning kazi yangu ni rahisi leo, yeah? We have wages, we have dividends, and we have bonus, yeah? And how do you determine how much to pay a member in a worker cooperative? Acha tusikie hapa, yes? Based on work, based on time. There was another point here. Here, based on market rates. Any other? Based on skills. Another one? Okay. So, you're all right in one way or another, yeah? So, how members, we have the element of member participation in different types of cooperatives, yeah? And in worker cooperative, how we gauge the member participation is based on This one, yeah? White sana, yeah? Yeah, so based on the amount of work. So depending on how many hours that person put in, kama ni kazi ya every month, how many days did they turn into work that month? If it's a daily wage, how many days did they come to work? If it's based per project, how big is that project, yeah? So those are some of the things we will need to consider, yeah? Now, I want us to focus on the worker cooperative difference, yeah? And I am hoping you're not seeing this for the first time. You're seeing this for the first time, eh? Okay. No, eh? Aya, kwa kikapu, how does it work in a circle? Mmesikia mmesema no very adamantly. How does a circle work? Yes. What's the motivation for joining a circle? I think that's an easier question. Uh-huh. Uh-huh. Okay. So ideally, for a circle, people give their money. Basically, they save. Sindio? And now, based on their saving, they're able to get credit. So the main motivation for you to join a circle is because you want credit and you'd like to save. Of course, to be able to access that credit. That will be the condition for you to get the credit. For an agricultural cooperative, produce, eh? What about the produce? The key word is, you want the produce to be what? To be sold. Sawa sawa. That is the main motivation, eh? Kama wewe ni mkulima wa maziwa, uko na maziwa una produce na umejoin cooperative, ili hiyo maziwa ichukuliwe na cooperative, iprocessiwe ama istoiwe, iconvertiwe into yogurt or whatever the cooperative does, but the key thing is marketing. Sawa sawa. Your agricultural produce, similar to coffee, similar to tea. The main motivation is for the produce to be taken and to be marketed. So ideally, you give the cooperative your products, and what you expect is payment for those agricultural cooperative, for the agricultural products. Now, when we come to a worker cooperative, I hope you're seeing the difference. Eh? What do we give? Labor, yeah? And what do we expect? Money, yeah? What does this mean, yeah? For a worker cooperative, the members dedicate more than other types of cooperatives. Sawa sawa, that is the first thing we need to understand. Eh? It is not a part-time activity. It is their main activity. It is their 8 to 5. Eh? It is not what they think about after 5 p.m. Eh? Tuko pamoja? So ideally, because you are dealing with an 8 to 5, eh? You are dealing, the time commitment required from members in a worker cooperative is more. Sawa sawa. The energy they dedicate to the worker cooperative is also more. So ideally, you should also compensate an amount that will also cater for their needs. Tuko pamoja? So I think that's the major difference we need to understand. Eh? The time commitment, the energy they dedicate, it is more in a worker cooperative as compared to other types of cooperatives. That is why the returns or how you compensate them will be really important, and it will be one of the factors that build the ownership culture and makes these people want to stay and be associated with the worker cooperative. Yeah? So now, I think this has just expounded my point a bit more. The first thing we need to understand is a worker cooperative is a member's main job. It is not a side hustle. Tuko pamoja? And what does that mean? The first thing is every member in your worker cooperative has to get paid. That is the bare minimum. What does that mean? You cannot have an inactive member. Are we together? Because in a circle, you can have people who are inactive. Even in agri-based, kuna mtu anaweza sema auze maziwa yake huko kando. Yeah? Through the brokers. Yeah? But in a worker cooperative, you cannot have inactive members. And one key concept that I would not like you to live without is more is not always better in a worker cooperative. Why? Because SACCO, the members you have, the more savings you mobilize, the more loans you can basically give out. Agri-based, more members, more produce, more, you can sell more. Sawa sawa. But what about a worker cooperative? More members, more wages. Sawa sawa. You should consider when you're adding a member or you're thinking about membership, can you compensate this member before you consider adding them? Sawa sawa. So that's why I think even in the examples Rebecca and the team were showing you, yeah, about basically some of the bakeries in the US, they ideally don't have like hundreds of members, as you'd expect other types of cooperatives to have. Tuko pamoja? Tumesema more is not always better for a worker cooperative. And that's a difference that you really need to get from here. Now, I asked you how members get paid, and I think the first answer I got was through wages. Yeah? Now, why do you, basically, what is the difference when you're talking about wages and maybe when you're talking about dividends? Yeah? The first thing, you're paid wages because you are an employee. Sindio? Huyu mtu akishinda kazini 8 to 5, anamaanisha either jioni, ama kwa wiki, ama kwa mwezi, there is the expectation that they will earn their wages, ama mshahara. Sawa sawa? And wages are payment for hours worked. It can be hours, it can be daily, weekly, or monthly. Sawa sawa? That should not differentiate it so much. Then the other thing, it is fixed. Sikuna venye mnakuanga mmeamua, sikuna venye mtu anajuanga kila mwezi napata this amount. If it's a daily job, they know, leo nikiingia kazi, I expect kama ni wananchi, I don't know, maybe 600. Mnawalipanga pesa ngapi? The scale, yeah? Mtu wa mkono? 800, yeah? 7 to 8. Yeah? 800? Okay. So basically huyu mtu akiingia kazini ajenge, inamaanisha atakuwa na expect 800. That is their wage. So there is no way they can come to work and you fail to give them their wages. Sawa sawa. Then it is based on the hours worked, or it can be a salary, or it can be based per project, depending on the type of business that you are doing. Sawa sawa. Those are wages. Now, when we talk about dividends, you pay dividends because these people contributed share capital. Sindio? And that means they are owners. Sawa sawa. So you have to give them dividends as a result of them being owners of the worker cooperative. Are we together? The other reason is you can only pay dividends, secondly, if there is a profit. The keyword is if. Sawa sawa. Wages are fixed. You have to cater for the wages. It is not an option, yeah? But you only pay dividends if you have made a surplus or a profit, however you'd like to call it. Yeah? What does that mean? It means dividends will vary. Last year, it might have been less. This year, you've done more business, you can be able to give more dividends. Next year, kukwe kubaya, it may go down. The keyword about dividends is that it will vary. But wages have to be met every single time you engage a member. Sawa sawa? Yeah. And the last thing, of course, dividends will also be in proportion to the labor contribution. Sawa. That one we'll understand better through an example that hopefully we'll look at. Now, what is the key concept about worker cooperative? What do you think? Would members prefer wages or would members prefer dividends? Wages. So hawataki dividends? Hapa nataka kila mtu ajidefend. You raise your hand and you defend your point. Yes.
So if they are there or they are not there, you can get to run your day-to-day activities. You can get to know you are earning. But when you talk of dividends, wait for a year, maybe sustain yourself for the year so that you get the dividends, it may not be possible.
But if we also concentrate on dividend, the more we increase, the more our cooperative grows, the more dividends we'll be getting at each and every end of the year, and it is adding. Because if this year we did well, we got this amount of dividends. Next year we also do well, so our cooperative is growing as we grow. As long as we are also getting our own wages in between the monthly wages.
I want to agree with him. Dividend is the product of your output. If you get more surplus, that means you have more dividend. Wages just means you have to come to work, even if your output is not as much. You know, you are calculating the number of hours, not that your output. That means you still get the wages. But for dividend, that means you have more surplus. It's calculated with the profit. The more profit you get, the more wages you get, and the more dividend you get.
Okay, thank you. Any differing opinion?
Or for us, we prefer the wages because your cooperative can operate at break-even point, whereby you don't meet or you don't make the profits, meaning dividends might not be there. Secondly, dividends are also prone to uncertainties. Like if we talk of the uncertainties, the COVID-19, it impacted many businesses and cooperatives, meaning that those people or the members of the cooperatives benefited on the wages than dividends.
A statutory requirement, meaning you have to do it. So, this example, they have around net income of 80,000. Sawa. Now, I'd like us to look at example B. They have still made the same 1 million. Their wages are 500,000, meaning their net income after tax is 240,000. Which worker cooperative is better than the other? Which worker cooperative is better than the other? And you defend your answer. The keyword is defend.
The 60K. Pesa yote ni yenu. It only depends mtu amechukua mingi kwa B, yeye amechukua kidogo. Whatever. A ni kidogo, B ni mingi. Pesa yote ni yenu.
Developing the cooperative itself.
The cooperative is you.
Yes. So which one would you?
If you get developed, the cooperative has developed. Because you are known.
Your conclusion is?
I think it's supposed to be
B. Okay. Assume the same number of workers for both organizations. The same number of workers. Everything is the same. Is he upper? He's not talked, then we'll finish with him.
B, I'll go with B.
Yes.
Because allow me to explain kwa Kiswahili.
Okay, explain.
Ile kidogo utapata itakusaidia uanze kujipanga. Juu ndio umezoea kupata kila month.
Let's listen to him kindly. Yeah.
Kila month unaona tukiweka 700,000 inamaanisha every month like unapata 10,000 approximately. But if 500,000 inamaanisha ni 5,000. So utaanza kujifunza kujipanga na hii kidogo. Alafu at the end of the year kutakuwa na mingi yenye itakuja. So kama cooperative mnaweza amua muinvest na njia nyingine ama murudishiane. So mimi niko kwa B. The more tutasave, jubadi ni kama kusave. The more tutasave ndio tutaweza kusonga mbele.
Your members, do your members prefer more wages now? Or are they okay waiting to get more dividends or bonuses at the end? Si so, yeah? Mitambo ni kama imekwama kidogo, puli itapika. You saw the seesaw. You had wages and dividends. Basically, you've seen if wages are the less dividends. You can pay, for example, in the case of that, the two examples. Tuliona wages za zilikuwa how much? 700. Assuming you have 10 members. Inamaanisha unawalipa how much? 70,000. Sawa sawa? Example B. B, same scenario. Members are 10. Sawa sawa? How much are we paying the members? 50,000. One thing you need to consider is the payment you are paying these members enough to sustain the needs of those members? Sawa sawa? Why? Because if you pay these people less, for example, niyo ya hata kama ni ya tuseme yenyu ya wananchi, hapa unawalipa instead of 800, probably you're giving them 500 or 600. Ama to assume kama wananchi wanawalipa option ya 700 per day and 500 per day. Of course, members will be more attracted to the 700. Sawa sawa? Because of meeting their daily needs. Tuko pamoja? Other than that, you need also to consider what is the market rate, so that you don't go into the danger of paying people way too little. Ikifika mwisho wa mwaka, you are giving them a lot of dividends. Yet, tumefika November, anahitaji pesa ya kulipa, I don't know, fees or something, or paying adequate, or what we call decent wages. You can also not forgo the aspect of making money. Because in a worker cooperative, you have to make money, you cannot pay salaries. Sawa sawa. So you should try to balance. That's why you see enough profits to be able to give members dividends. Sawa sawa. But in most scenarios, for a worker cooperative, members have different business aspects that can help you make more money. Ni kama mitambo imesema twende manual, yeah? The key concept, how do we calculate wages? It's the next one. Yeah, yeah. Key concepts. When you're thinking about wages, what is it based on? When you think about member dividend, what is it based on? Sawa sawa. Now, on the next slide, assuming we have slides, we have how do we set our wages? That is a very important question. How do you decide to pay a person 50,000 as opposed to 70,000? For example, in the scenario that we were just looking at. Before we go very far into this, I remember we did a gender, and the module on gender was talking about equity. And equity means fairness. Sawa sawa. So ideally, since we are worker cooperative and we already understand, hopefully, the gender aspects, we should have equity or fairness in how we pay our members. Sawa sawa. You do not pay a person based on their gender. Ama kusema, huyu ni mwanamke, haitaji 70k. Hata tukimlipa 60, they will still be comfortable because probably you have your own justifications. which we already discussed. At least I attended the gender session, yeah? So ideally, you're supposed to pay a member based on their skills. So, independent of their gender to begin with, yeah? So you have to practice from the onset what we call gender equity and equality. So that usianze could differentiate wages or salaries based on that, because we're still cooperatives, and cooperatives have equal treatment for their members. Sawa. Sasa tunaweza set wages, yeah? I hope tunaenda pamoja. Flip mtoke hapo kwa wages, wende kwa how do you set wages. So now I want us to discuss how do we set wages. There are two ways. We can start from the price, or we can start from the cost. So I will start with scenario B. You need to consider how much, for example, kama ni kikapu, when you are deciding how much to charge, you need to consider how much money has gone into the production of this kikapu. Sawa. Tuko pamoja? How many raw materials have you put in? How many hours of labor? How much are you going to pay this member? Sawa. So that by the time you are deciding how much you are going to charge, it will be you will already have covered your costs. Sawa. Because if you set, for example, a price for your kikapus that is lower than your costs, then it means you are in a negative. Sawa. That is the first way. You need to ensure whatever good, if it is a good you are producing, the price you are charging has to cover your costs. Tuko pamoja? For them, it's a physical good. We have a lot of people being service-oriented. Sawa. So when you're determining your price, you need to consider, kama ni project mmepewa ya kujenga, you need to consider which type of skills do you need, how much will you pay for these skills, so that it can be an aspect of your total cost. Sawa. After getting your total cost, then you set a price that will ensure you cover your total cost. Sawa. The other option is starting from the price. Price umeangalia ukoona this sector, tuseme kila mtu ako kwa which sector? Yours is Alpha Prime,
Yeah.
You are in?
Cleaning services and moving.
Cleaning and moving. You have looked in the sector and you've seen cleaners are normally paid this amount. Sawa. So you're starting with the aspect that, okay, I need to charge minimum this level of amount for my whatever service I am giving. So you can consider the market, what is prevailing within the market, so that also when you are pricing your good, even your competitors, there's a reason why they price their goods that way. Hawakukaa chini wakaamua kitu kama mkate ikuwe 65. By the time they were arriving at mkate ikuwe 65, they had also considered some certain elements in their business. So you can start from the price element, and you need to consider, okay, what are my competitors charging? The second question would be, is there anything that differentiates the kind of service I give or the type of good we are producing that can allow us to charge more? Tuko pamoja? Angalia competitors. The next thing angalia is, do you have anything unique that you are giving these people that they would be willing to pay extra for that good that you're giving them? Tuko pamoja? That's how you start from price. Your competitors, you look at whatever service or product you're offering. Is there anything that will allow you to charge more than what the market or what your competitors are charging? Kwa pamoja. I hope tumeelewa the differences. Cost, now you cover all your costs, set a price that is above your total cost. Starting from pricing, look at what your competitors are charging, then mnajiangalia nyewe wenyewe. Do you have anything that differentiates you, that can allow you to charge a higher price than what is prevailing in the market? Tuko pamoja hapo? Aya. Now I want us to look at price and cost. Sawa. Price me the amount you charge for your goods. Sawa. Kama ni kikapu ile bei unauza hiyo kikapu. Tuko pamoja? Kama ni wananchi, price ni gani? Contract ama project. Mwenye mnawapa hiyo kazi mmemlipisha pesa ngapi? That is what we call the price. So the cost is what do you have to do to deliver that service. Sawa. Kama ni wananchi, for example, ama health, would you need some PPEs? Personal protect. I think Modai alitusaidia. So, do you have any material that you need to purchase? Uko kwa wananchi ni helmets, probably. Maybe they need the tools of trade. And of course, for service, the skill. Do you have all the skills required for you to be able to deliver that project? Kwa kikapu, which is, what do you call it? They're actually creating a good. Do they have all the raw materials they need? So that all that will go into the cost. Sawa. So the price always has to be more than the cost. That is the bare minimum. You cannot charge a price that is less than your cost to begin with. So in case you discover your costs are too much, you need to think about ways of reducing the cost. Are we together? And of course, for price, ways of increasing, you can look for more clients to sell more goods so you can get more money. Sawa. So you always need this gap. The gap between price and cost is what we call a markup. Sawa. A markup or a margin. Margin is each good you sell, how much are you making from it? Sawa. And as much as you can, you should always try this gap to be the biggest. The difference between your costs and the price, you can try as much as possible that difference to be as big as possible. Sawa. How can you make it big? Either you raise prices, of course, which is not very easy, because you still have to consider all the other factors. Do you have anything that allows you to do that? If you cannot do that, most organizations will focus on reducing their cost. Can you get the equipment at better rates? Sawa. The non-core functions, you try make them cost as minimum as possible without compromising on the quality of the work. Sawa. Yeah. Labor is a very key cost. Kama mmeona, sio? Mmeona the two examples. So something that you will really need to manage in a worker cooperative are your labor costs, without compromising on the decency of the kind of employment you are giving your members. Kwa pamoja. So, ideally, what you pay your members will vary depending on the type of business you are in. Madaktari, sijui kama mnakuanga na hourly rate, unakuanga na per consultation. At least hiyo ndo nimeona. Then there is the consultation services. Do you have any other differentiable kind of pay? Then service charges that are given to whoever offers the service. Or depending on your skills and qualification, upate surgeon atalipwa tofauti na pediatrician. Ama sasa nimeenda mbali sana. I am close. Yeah. So ideally we have the salary, which is very common, and at least we all understand how salary works. That is, you pay per month. Sawa. That is what is ideally the definition of a salary. Then we go hourly. I think in Kenya hatuna hii sana unless walimu ndo tunajua tunalipangwa per hour, especially in higher education. We have daily, tuko na wananchi, na kulikuwa na wengine huko nyuma. Inaitwa aje? Nyeri fundis na ya Nairobi hakuwa na ya tatu. Ni wananchi na Nyeri fundis So of course for them they have the daily wage. Jumaje sasa ndo unakujanga unashtua watu, naambia we have some bonuses and we have some dividends for you. And of course you are business, you need to be able to be making money. Project, and of course the other ones yenye tumeambiwa na health, they have the service charge. Depending on the kind of service you are going to seek from the worker cooperative. Sawa. Any other mode of payment that umeacha? Maybe artists yenyu iko covered? Iko kwa project, Oh yeah.
What about like commissions?
For commissions,
Other people who like maybe get commission.
Do they have commissions only, or do they have what we call zinaitwa aje? Wako na retainer. Mara mingi unasikianga wako na retainer. Retainer is minimum, probably they are paid 10,000 or 20,000. Then anything above, I don't know, 20 clients or something, they get commission. It is there, but mostly in marketing. And for that, hopefully tunaweza itackle in the afternoon, because the cost pekee, we have what we call fixed costs and variable. Fixed ni kama mishahara yenye ibadiliki na lazima ilipo. Variable ni zile zinasonga na production. The more you sell, or the more you produce, the higher these costs go up. Sawa. And commissions fits there. Ile ina vary na your level of sales.
Because I was looking at maybe like, for example, maybe for like a group like maybe Wananchi, or maybe like Alpha Prime. If maybe
ukijoin marketing cooperative, si kazi ya cooperative ni kukutafutia market, whether it is local or it is international. Sawa. Similar for our worker cooperative. The work of the members, including the board, is to look for work. So the first thing you have to ensure is that the work you have, is it sufficient for the members that you have? Sawa. Because if the work is not sufficient, hapo ndo sasa tunaingia hizo siasa za tutapea huyu kazi gani, tuache huyu, na how will you pay this one and leave this other one out. Then we come to the issue of how many members do you have. Unaangalia the kind of projects you have. Is it more beneficial for you to have 7 or 10 or 15 members based on the amount of work? So when you're making decisions on membership, the amount of work is a deciding factor. Sawa. Because the bigger you are, the more work you need to be able to provide. Because hakuna mtu, tumesema there are no inactive members. Sawa. You cannot have inactive members. So the work you have has to be sufficient. Sawa. Tukiendelea kuna kitu tutaangalia inaitwa ya workers na ya worker owners. Sawa. Hopefully it might explain a bit But ideally, the basic thing before you do anything, you need to have enough work to cater for the workers you have or the members that you have. You only bare minimum, and it is not negotiable. Otherwise, you will start losing members. And the cost of losing a member is more in a worker cooperative. Why? Because you have to look for another person who has the same philosophy. Unajua? Who shares the common bond. After getting them, maybe you have to train them to get the skill set that they need to do the work. So the cost of losing a member, it's very significant for a worker cooperative. Si mtu tu ameacha kazi. You've lost someone who shares the same ideologies as the group. Sawa sawa. And ningetaka to pose hapa. What do you charge your customers? You can charge per price. The same thing. How you pay them is you can also borrow the same philosophy into how you charge for your services or your products. You can charge per price. You can charge per hour. You can charge per service. For your case, you can charge per day. Sawa sawa. And of course, you can charge per product for the case of kikapu. Tuko pamoja? I am hoping we have gotten or understood the aspect of pricing and wages. Tumeshika kidogo ningependa tuende break kidogo ndo tukuje sasa kwa hesabu. Then we'll need to get the member surplus and distribute the bonus and the retained earning. I want to show you how this looks like so that you can hopefully better understand it. Yeah. So we'll start with a very simple illustration here. So for example, you are starting with 200,000.
Yes.
Sawa.
Yes.
That is your revenue. That is the total money you have made per year. Sawa.
Yes.
Then you will need to deduct your costs. Cost includes the labor costs, the cost of getting your raw materials. Sawa. Deduct expenses. Maybe you're paying some licenses to the government, some insurance. Sawa. When you get your revenue, deduct your expenses. You will arrive. My pointer, I point up kwa white. You will arrive at the net surplus. We are together till then?
Yeah.
Most cooperatives do not have an issue getting to that point. Penye tunachanganikiwa kwa ni when we are looking at members, proportion, and retained earnings. We are together, yeah? Now, there are special tax consequences as to being a cooperative. Wenye wamesoma kidogo, mnasikianga cooperatives are tax exempt. Ama kama mjasikia, mnafaa kuwa mmejua, ya? There's a reason why SACCOs can manage to give you loans at whatever rates they are giving you. Because there are some special things they enjoy due to the factor of being a cooperative. In a cooperative, just from a tax perspective, it is believed that no one can make money from themselves. Sawa. That is a principle of taxation. No one can make money from transacting with themselves. And that is what makes cooperatives tax exempt. Tuko pamoja? Now, for example, for the case of a SACCO, see, people save. It is their money that has already been taxed, that they are saving. And out of these savings, the savings are used to give them loans. Sawa. That is why they are tax exempt. Now, for the case of a SACCO, as long as they can prove 75% of the money they have made has come from transacting with their members, basically giving loans to their members, they will be exempted from taxation. Sawa. What is actually taxed? This, what we are calling SACCO, and probably we understand. A SACCO might have some buildings, it is collecting some rent. Sawa. That is not a transaction with its members. So whatever they make from tunaita side hustle, the main activity of the cooperative, that will be subjected to the 30% taxation. Tumeelewana hapo? So, I pardon that point. Any money you make from transacting with your members is tax exempt. Tuko pamoja? So for SACCOs, any money they make from giving loans to their members. Are we together? From agricultural cooperatives, any money they make from receiving produce from their members and reselling it in the market is tax exempt. But what is not exempt are these other businesses they carry on aside from what they were registered to do. Sawa. So for the case of a SACCO, unaweza pata wamekuwa kubwa, wamenunua building, ama they're collecting some rent, meaning they're getting some rent income. Sawa. Or they have invested or bought some shares somewhere and they are getting investment income. Sawa. So kuna hizo side things that they have still to bring them money. Sawa. All those things are what we call, in our case, we'll call them quote unquote retained earnings. But these are transactions with non-members. And this is what is going to be taxed at the 30% tax rate. Sawa. So mukitengeneza cooperative yenu, if you declare everything as income from transacting with non-members, everything will be taxed at 30%. If you declare that you're making money from your members, that will be what is tax exempt. So the error normally comes in how you declare your income. And I'm saying that is because we have already worker cooperatives existing that are struggling with the aspect of taxation that have existed for a number of years. So how you do that part is very critical. Because inamaanisha it will determine how much you pay to the government. Sawa. So now, any money that you've made from transacting with your members, it will be a certain proportion. Maybe 70% of your income you've made from transacting with your members. Sawa. Similarly, that money will be distributed as member bonuses. Sawa. Bonus, I think the best example is our penny kama agricultural cooperative. Sindio? Simnasikianga wakulima, wachai, wakahawa wanaendea bonus. Sawa. And bonus for agricultural cooperatives will be based on how much kahawa, how much tea did you deliver to the cooperative. Similarly, for our cooperative, bonus will be based on how much work, the amount of labor that you contributed into making that profit. Tuko pamoja? So, kila mtu atapata the same bonus. What will be the same? Itakuwa dividends, because all of you have the same share capital. And share capital, si kama mmesema ni 10,000, kila mtu amecontribute 10,000. And you need to give workers who are owners their dividends. And dividends, tunasemanga ni interest on share capital. Sawa. Tuko pamoja? Bonus, it is a proportion of the income, sawa, that is distributed to the members. So for SACCOs, najua tunapatanga tu lump sum figure. For example, the people who are in SACCOs, unajua yote ni dividends. Sindio? But ideally, what you call dividends has two things, even for SACCOs. One, you get interest on share capital. Kwa pamoja. Then you get interest on deposits. Sindio? Wenye wanaiangalianga ndani kidogo ya? Because if I have saved 2 million, you have saved 1 million, they have saved 500,000. Sasa mkienda mwisho wa mwaka mkipewa dividends, kila mtu anakuanga na dividends tofauti. Sawa.
Yes.
The difference is, for example, in my 2 million, I'll get interest on my deposits that is different from interest on her deposits. The 1 million that is different from interest on her deposits. Sawa sawa. Hizo ndo tunaziita quote and quote bonuses. Kama umeleta 10 tons za kahawa, huyu 5, mwingine 1 ton. When all this is marketed and money flows into the cooperative, the element of bonus will be different for each member. Whoever supplied more gets a higher proportion of bonus. Sawa sawa. Similar to a worker cooperative. Whoever worked more than the other, ikifika kwa member bonus, they'll have to be paid a higher bonus. Hapo tumeelewana? Tumeelewana? Yes, naona mna digest. Tutaiona better through some example here. Now, let's look at a classical example because we are dealing with worker cooperative. So what do people contribute? Their labor. Sawa sawa. Let's say this labor is the amount of hours they have worked. Are we together? Let's look at this case. You have Tindi, who has worked for 600 hours. You have Olga, who's done 400 hours. You have Nasala, sijui mbona imesonga. Okay, yes. And you have Mike, 200. Mike is 300 and Nasalan is 200, yeah? Imesonga sana, yeah? So Nasalan is the one who has 200, yeah? While Mike has 300, yeah? Na Diana kona 500, yeah? So, for that year, for example, the total hours worked were 200,000 hours. 2,000. Yeah, 2,000, yeah? So ideally, in a worker cooperative, you have to maintain the records for how long have these people worked for you. If it is daily, how many days did they come in? If it is monthly, what is their rate that you are paying them? If it is service, you need to maintain these records. Because ikifika could distribute surplus, you will need to consider this in how you're going to distribute their bonus. Sawa sawa. Now, in this case, these ones that have a light pink, they are what we call non-member and the ones, so you remember it has the same color, yeah? It has a different color on my laptop. Yeah. Yeah, but we have members this side that are 60%, yeah? So for our case, the people who are members are Tindi, Olga, and Nasala. Sawa sawa. Then we have non-members who are just workers for this worker cooperative. Sawa sawa. That is Mike and Diana. What do we mean non-members who are just workers? Kuna time kazi inakuwa nyingi, and you do not want to incorporate another member, but kazi ni nyingi, kama hata mafundi. Kazi ikiwa nyingi, si mnaita fundi anakuja anafanya kazi na you let go of them, yeah? You only engage these people when there is over and above work that your members cannot be able to do. Sawa sawa. And because you do not want, they have not qualified for membership, so you have your terms and conditions. Maybe you've said you have to be with us for 3 months or 6 months for you to qualify for membership. So they need to show their dedication to the worker cooperative. Because kulala kuamka huyu anataka kuwa member mnamuadmit. Lazima si hata sako kuna vitu you qualify. I don't know, you say for 6 months for you to qualify for a loan. Similarly, in a worker cooperative, you have to work for a certain duration of time, prove ABCD or meet these conditions for you to qualify for membership. So in this case, you have members that have worked 1,200 hours. That is the 600 plus 400, that is 1,000, plus the 200 for Nasala, that is 1,200 hours. Sawa sawa. Then you have non-members who are just workers, not worker owners. Sawa sawa. Non-members are Mike and Diana. Mike has worked for 300 hours and Diana has done 500 hours. Tuko sawa hadi hapo? Now, when you want to distribute your net surplus, the one that is tax exempt, now, the one that you've already proved that this has come from transacting with your members. Sawa. You will need to distribute this as per the number of hours worked. Sawa. And you need to remember, in contribution of this net surplus, you had members who contributed to this, and you had non-members who contributed to this net surplus. Are we together? So you had the 1,200 hours for members and 400 for non-members, yeah? Now, ile profit yetu ilikuwa, I think ilikuwa 1 million, eh? Yeah, if I'm not wrong, yeah? So, out of the 1 million, 1,200,000 is 60%. Sawa. That is 1,200 out of the total 2,000 hours. It makes about 60% of the total hours. Sawa. Now, this 60% is what is going to be distributed to the members as bonus. Sawa. Then we will discuss what happens to the amount that is contributed with non-members. Sawa. Tuangalie, and that's basically this. You have the 600,000 being surplus. Sawa.
Yes.
You have the 40 at 600, the 60K na 40K. Yeah. So you have the 40K being what we call retained earnings. Sawa. You remember what I told you? Anything you zinaitwa side hustle. What would you call a side hustle for a worker cooperative? It is this, the non-members. Because these people have contributed to your profit, but it is not a transaction with the members. Sawa. So for a worker cooperative, your transaction with non-members will be taxed. Are we together? Your transaction with the members will not be taxed. Sawa. Yeah, I think it has been explained here. What is retained earnings? It is money generated by non-members. That is the first thing. Sawa. Secondly, it is turned into retained earnings. Unaona after umetaxiwa, that money you cannot say it belongs to member A or member B. Sawa. It now becomes collectively owned by the cooperative. Sawa. Hiyo ndo mnaitumia ku reinvest, kufanya vitu zenye mnataka to do to grow the business. That is why we are saying it is turned into retained. Retained earnings ni pesa umetengeneza na umeamua ku retain, kubaki na hiyo pesa, instead of as opposed to distributing that money as bonuses. Yeah. Then of course it is collectively owned. No member can come and say this is my share of the retained earnings, because essentially they did not contribute to it. It is the workers who are not members who contributed to it. So it has to be owned by the entire cooperative. Sawa. And lastly, it is taxed. Sawa. Any money you make from not transacting with your members is subjected to taxation. Yeah? Now, when we go to surplus, the first thing, it is generated by your members. The 1,200 hours, which was about 60% of the total hours worked. Sawa. Then it is distributed either as dividends and also as bonuses. Hapa ndo hiyo pesa inatokanga. Tuko pamoja? Lastly, it is individually owned. What does that mean? Kila mtu anajua share yake ya surplus ni pesa ngapi. And this is how you benefit based on anyone who worked extra. Si mliona huko kuna mwenye alicontribute 100 hours. Ideally, when it comes to surplus, they should get a higher proportion of the surplus. As opposed to the person who did 200 hours, they should get a lower bonus. Sawa sawa. Ndio isikuwe kuna mtu alipanda Kilimanjaro, akaenda Mount Kenya, akaenda Kilimambogo, and another one only did Mount Kenya, and they are getting the same share of the surplus. Sawa sawa. So bidii yako ndio ina determine how much surplus that you get. And of course, it is not taxed in Kenya because you cannot make money from transacting with yourself. So we saw the surplus of 60,000. And in this 60,000, inafaa kupewa the members only. The members were Tindi, Nasala, and Olga. So when you're trying to see how much does each person get, that is why you need to maintain the records of how many hours did each person contribute. Sawa sawa. Hizi ndo unatumianga evidence kwa serikali ya kusema these are our members, these are our non-members, and this is why this is our tax obligation. Sawa sawa. In case you do not have those records, it will be very difficult for you to defend that your income came from members and non-members. Sawa sawa. So, similarly, Tindi did 600 hours, which is 50% of 1,200. Sini half ya 1,200, 600. Ideally, that's 50%. So 50% of the 60,000 is supposed to go to Tindi. Sawa sawa. Similarly to Olga, they did 400 hours, that's about 33%. And Nasalan did 200 hours, that is 12%. 16.7%. Yeah? Now, how do you distribute this bonus? As per the percentage. So 50% of 60K is 30K. Yeah? So ideally, Tindi, this was based in dollars, gets $30,000 as bonus. Sawa sawa. Similar to Olga, who did 33%, that is equivalent to 20,000 as bonus. Sawa sawa. And lastly, we have Nasala, who did 16.7, that accounts to about $10,000. Sawa sawa. Hapo unaona kwa surplus hakuna non-member yoyote. Non-member, they do not take part in bonus distribution. Sawa sawa, because they are not your owners. So they cannot benefit in the profit at the end of the year. Aya, kwenye wanapenda hesabu, tukisema ni spreadsheet. This is how it would look like in an Excel. Ukaeka kwa Excel, this is how the same thing would look like. Unasema, you list your 5 or 10 members or 20 members, depending how many members you have. The first thing you need to do, you need to categorize your members. Are they members or are they non-members? If they are members, unaandika yes, these people are members. Sawa sawa. Then unaangalia, you have maintained records hopefully for that year, how many hours or how many days or how many months this person was engaged. So from 600 Tindi to 500 hours, yeah? Diana. Sawa sawa. And I hope you are seeing, kuna workers who work more than your members. He had a question on output. Yes, you had a question on output. Yeah? Unaweza kuwa na workers who dedicate more hours. It happens. So, what happens? You do a portion. Tindi alikuwa 30%, Olga 20%, Nasalan alipata 10% of the total surplus. Sindio? Na pia walipata a percentage. Sindio? Tunakumbuka tukichora hiyo pie chart. But now, when it comes to distribution of this bonus here, they do not take any share of the $60,000 in terms of bonus because they are non-members. Tuko sawa? Mtaweza kujidefend mkifika mnataksiwa na serikali. Yeah, so I am hoping if you start from the start and get it right from the start, ideally you should not have issues going forward. So you need to take advantage of being a cooperative and the tax exempt aspect. Otherwise there will be no difference between you and a company and sole business owners or a partnership, because they are still taxed at the 30%. So for you to enjoy those benefits, you also need to understand the cooperative model as a business enterprise. Sawa. Yeah, sasa ikifika hapo, I'd like us to go to a group activity. Okay, here's a question before we go to the group.
Now, my question is, if we go to example B that I want to understand better. Now, according, you can see the net income. Let us use example A. The net income is 100,000. So this means that this 100,000 is the retained earnings because it has been deducted by 20% of the tax.
You need to deduct your statutory reserve. You understood what? Okay, uliza swali yako tena kwanza.
Okay. Ndio surplus yetu.
Yes.
Na kwa hii surplus mbona government itachukua 20% na labda tuna non-member made kwa tu example?
No, government haichukui the 20%. Statutory reserve. You'll be left with 80,000. Sawa. This 80,000 is the one we assume hakuna non-members kwa.
Hakuna non-members there.
Hakuna non-members. Let's have that assumption. This 80,000, you are going to distribute it to your members. Sawa. How are you going to distribute it? One, your members are your shareholders. So lazima walipe dividends. Sawa. Dividends is interest on share capital. Juu kila mtu alicontribute share capital. So kila mtu alitoa 10k, kila mtu anapatanga ideally the same dividends because you have the same level of ownership or the same shareholding. Sawa. Ukishatoa, you distribute the others in terms of how much labor each person contributed to this profit or surplus that the cooperative made.
Ama tunaweza ikata half, tuseme 40,000 itaenda kwa dividends, 40,000 iende kwa bonuses.
No, dividends is already a Coop Bank. If they make money, the first people who are paid are the owners of Coop Bank. Sawa. And they are given dividends. These people have already contributed money to the cooperative. Si ikianza kuna ile pesa mmetoa. Ndio hii cooperative isimame, and you remove it as your share capital contribution. Na mmeka maybe minimum is 10, minimum is 5,000 for you to be a member. So these people have contributed to the foundation of the cooperative. You cannot decide to lower that money. The only thing you decide, ukitaka dividend iende juu, you decide what percentage do you want to give as dividend. If you want dividends to be more. Sawa. Ukiangalia most circles, unapatanga what they declare ni interest on share capital. They'll tell you like 20% is interest on share capital.
So, but that example, itakuwa 20% of 80,000.
No. 20% of your shares. So kama mmeamua share, si iko based on share capital. So kama ni 10,000, share moja ina attract interest on share capital. Sawa. So kama mmeamua for example ni 20%, it will be a factor on the total shareholding. Sawa. Your shareholding out of the total times the percentage and the total surplus. Maswali
mtu ametoa tuko na 80,000. To assume tuko na 80,000. Now kwa watu watano na tuseme hiyo share kila mtu before ingie ni 20 shares. So kila mtu ako na 20 shares kwa watu watano. So please jaribu kuniexplainia na hii 80,000 na hii 20 shares zao nitagawanisha hii dividends na nibaki na pesa ya bonus.
Okay.
Jaribu
kuona the difference. Acha wananchi ajibu ndo explain further.
Is the work hours. So tuelewaneni kidogo, sio pesa yote ya cooperative yetu.
Acha niwasaidie kidogo hapo I think his only fear is that 22. Hiyo ni pesa ngapi? 1000. Unashika? Dividends, hata ufanye hesabu gani, it never occupies the highest proportion of your earnings or your surplus. Sawa? Because it is a factor of your share capital. Share capital ni 10, hata useme ni 20%, mnapeana 20% on share capital. That will be 2K. Sawa? Unashika, hata ushikanishe even your 5 members na wape hiyo 2,000, itakuwa 10,000. Na ukideclare 20% the interest on share capital, that's a big figure. But most people forget that it is based on share capital yenye mlieka ni pesa ngapi. Sasa kuna watu hadi wako na share capital ya 500. Sawa. Kuna wenye wako na share capital ya 5,000. Sawa. I don't think kuna yenye iko na share capital imepita 50,000. It's very rare. They are there, but they are very rare. Because when you put a very high share capital, you're putting a very high qualification for people to enter and become your members, meaning you will restrict entry. Tuko pamoja? So at any one point, the largest share will always be your bonuses. Sawa?
So hiyo pesa utaenda kwa dividend.
Yeah.
Utakuwa umeitoa kwa
So hizi hesabu mnafanyanga ile time mmetengeneza pesa pekee yake. Kama mjamtengeneza pesa, you cannot distribute. Sawa. Mmeshika? Ameuliza swali mkaingia into the technicalities. Uko mwisho?
number of hours.
Okay. This retained earnings itabakia biashara.
Itabakia ya cooperative.
Yeah, the cooperative. Should the investment of this money or the usage of this money be before tax or after amepena pesa za serikali after tax?
Lazima mtaxiwe kwanza. Lazima you have to be taxed first.
But that will mean that tutakuwa tunapea gava pesa mingi.
Exactly, it happens.
But if we pay more wages, but these people are non-member.
It's a balance. It is a system. It will always be balanced. One will always have an impact on the other. Tujaribu swali. Tuone kama it can help us digest some of the information that you asked.
Kwa mwisho wa mwaka hakuna dividend. Yenda kwa dividend unaambiwa ndio. Sasa tukienda
ya members
hapo, hata tukienda kwa Tribunal Court utakuta huko kuna kesi nyingi sana. Asante.
You know, for the board, you are the ones who elect them to those positions. So you have the right to call those people you have elected out of office. Members lazima si mnafanyanga AGM. Na kwa AGM si mnaitanga COP officer. They can be ex-official members of your AGM. As members, you have the right to elect these leaders, meaning you have the right to remove. Sasa mkikeep quiet, unajua kama members nyinyi ndo mnasafa. Ndio sasa.
And currently from the story that we read previously, yes, why so? Because they're even asking for more, like they're requesting for more members. So that means they're being sustained and they are good. So is the cooperative financially is the cooperative financially sustainable? Yes, as per the story first, it is sustainable. And will it reach its critical number? So now we said no, because obvious wakiongezea wengine pia ndo will it reach critical number? Why alikuwa amejibu vibaya. So anyway, will it reach its critical number? We said no. Sababu aje, there's more work, so that means even if they add more members, still it will be sustainable for them. So ndivyo. So on the second list, it said, we went with the option of adding the 3 members. And why so? Because they are already stable, already the needs are being they are being fulfilled. And still they are having more members. So they should not add members, they should add employees. On them having employees, not members, basically because the work might end up inaweza kaishia katikati. Wakiadd members, inamaanisha ile siku kazi itaisha ama the demand itaisha, wata have tena kuwalipa wages na kuna kazi. Sasa ndivyo, wakiadd employees, ile time kutakuwa na kazi, watawaambia wa step down. Sivyo? Yes. So inamaanisha ina resonate, so they should add members, not employees. Sasa ndivyo. Employees, not members. So they should raise the prices. See, already they are having demand and they want to hire more members. Sasa ndivyo.
Yes. Yeah. Continue. Support your people.
You see, like I'm even seeing myself in the car. Yeah. Strong. So anyway, alafu change they should on the question 3, they should not change the split, retain. Sawa? Distribute the profit to current workers. Yes, they should the one if I've not expounded it so good, is one of my members can come. You're good. No.
All right, Power.
Good afternoon. Good afternoon. Hey, kusimama hapa si rahisi.
Yes.
My group over there, Fundis, myself, I'm Maria Nur. Is the cooperative meeting current members' needs? No, because most of the workers are overwhelmed. Tukiona sentence ya kwanza inasema some workers wako na kazi mingi. Inamaanisha si wote wako na kazi mingi. Some. So that means that some workers are not working while others are being overwhelmed by so much. We decided to raise the amount to 2250 Kenya shillings a day. We also decided to distribute the profit to current workers, and we didn't change the 70-20-10 split, and also we didn't hire new employees because we first have to gauge the salary yenye imeongezewa, the 2250, will it motivate the other employees before hiring the others. Thank you.
Just before you leave,
your surplus was a lot for the first 2100 shillings per day for the 10 members, and since some members were not working, we couldn't hire more at the time, so we had to balance between 2100 to 2500. For 2500 it was making losses, so we had to go with 2250, which we had around 810 surplus. That's why.
Ndio. So huko niko masocrates wako, mahesabu imepigwa deadly. So hiring tumekataa kuhaya wasi. Tumeprefer tupige job tujilipe. So piga hustle naongeza mfuko yako. Hustle tujahaya mtu yoyote. Ku raise prices tumeona because if I raise the price inamaanisha the door yenye expect iongezeke haitaongezeka. Naweza lose customers kweli. Tunasonga. So tumechange splits. So tumepiga mawe yetu. Tuko na hatutaki kuguza surplus. So inamaanisha surplus Inamaanisha 73.5% ingie kwa kulipa wages. Haya 16.5% ingie kwa hiyo percent ilikuwa inaingia kwa nini? Kwa expenses. Asante. Na 10% ingie kwa net income. Haya. Kwa hii distribute the profit to current workers. Tumedai hizi. So sinamaanisha tuko kwa other ideas. Si shukrani.
Is the cooperative meeting current need? We have said no because some members are demanding for more members. Okay, step 2. It is profitable, but however, it will not reach its critical figure of 2.5 million at the end of the year. Mahesabu imefanyiwa, mimi sitarudia hiyo mahesabu, imefanyia na imeingia pamoja.
Swali ya kwanza ilikuwa okay. I had people answering. Is the cooperative sustaining its current member needs? There were some groups that were saying yes, it was sustaining, and there are some groups that are saying no. The resolution ni yes or no? No. Senor? Why? Because clearly some have already told us what is happening. Some of the members feel overworked, when some of the others feel like they are not getting enough from the worker cooperative. So when you're having your members having differentiated feelings, and of course none is satisfied to begin with, so ideally you're not currently meeting your member needs. Aya, swali ya pili ilikuwa gani? So, do you think the cooperative is financially sustainable? No. Si wanna make surplus? Wanna make 1 million? And they anticipate that they are going to grow. Sawa sawa. Sustainability inauliza, do you foresee yourself continuing for the foreseeable future? Sawa sawa. When we're talking about sustainability, we are asking ourselves, do we see the cooperative continuing for the foreseeable future? You're seeing the sales are anticipated to grow, so ideally they are supposed to continue for the foreseeable future. Sawa sawa. Aya, swali ya tatu ilikuwa gani? Do we? Will it reach? Target yao ilikuwa 2.5. And how much? Remember how much can they manage to make maximum? Simliwa mmeambiwa hapo 1.8. Yes, they are targeting to get to 2.5, but they can possibly manage to get to 1.8. So in this current year, they might not be able to get to their critical number, and that's why it's very good to have or to set a critical number, so that ukiona your sales zimegrow, you just don't assume you're doing well. They are growing, and what is the base factor? What are you targeting? If you just say you are growing, yet you are growing without a certain goal or a certain end you'd like to achieve, you will assume every sort of growth is in the right direction. And possibly your potential, like for their case, they feel they have the potential to get to 2.5. But wakifanya hesabu zao wanaweza fika to 1.8. So you have to think, what ways can we engage ourselves and our members so that we can be able to actually get to this 2.5. Sawa sawa.
They have a cost of 120 per month. So we made it there.
120 per month growth.
Yes.
So unaona watafika? 120 per month ni pesa ngapi?
Something million per year.
per year. Na wanataka kufika?
1.5 and the only 1.8 they have it.
So wameshafika. In this current one, they might no, but in the next, if they maintain the growth rate, there's a possibility that they might actually get to the critical number. Yeah? Target ni per year. Or you can have 5-year plan, 3-year plan, but most immediate you need every single year you need the yearly target. Sawa sawa.
Yeah.
Haya. Then sasa tunaenda kwa alternatives. Mama, kuna swali lingine? Now we are going to the possible courses of action, if I'm not wrong. Unless there's another question that was there. Okay. So, on the possible courses of action, I think I'll take one of yours. The next question is that enough to hire? I think that's the next question, yeah? You've been told that they have 1 million bank surplus, and you're being asked, is that amount enough to hire 3 new members at the current wage? Yes or no? No. Sindio? I think hereby all the groups said no, because when you are allergic to arithmetic, walisema parentheses. They didn't like the parentheses, yeah? But there's a reason at them. You have the first alternative. You have 10 members at 2,100. And you have the net income of 1.8 for the year. Sindio? Ile option ya kuhire 3 new members so that you are now 13. Uliona that year alone wangepata negative 2 million loss. So now this response goes to the team of engaging the 3 new members as workers and not as owners. You need to realize, even if you engage them as workers, you still have to meet their daily or their monthly requirements. So the implication of hiring them as workers or worker owners does not fit into play. But it's a good suggestion, given different circumstances. But for this case where these people will need a daily wage of that 2,100, whether you give them the worker status or the worker owner, it still has the same financial implication. Sawa sawa. Then in this case, there's a group that suggested we hire 1. I think ilikuwa yeye. Hapa sasa ndo itabidi mkae chini kama cooperative. I will remind you, there are some members who still feel they do not have enough work. So imagine how will they feel when they see you've started hiring new people. Yet ile kazi wako nayo, they feel it is not adequate for them. Sawa sawa. Then there was the question of paying the 10 members, giving them 2.5. Sindio? Na mmeangalia, if you give them 2.5, you'll have negative 561. You'll have a loss of 500,000. Sawa sawa. I think there I appreciate the group that has said probably we can raise the price. The price, I mean, yes, instead of giving them 2.5, we give them 22.50. Sawa sawa. Wage, yeah, yes. So that is actually an alternative that you can explore. Okay, you might not be able to give everyone the 2.5 that they want, but why not give them something just slightly higher that will not negate.
In the brackets, are we losing money then, or are we going to be okay? And so part of what you want in a worker cooperative is to be able to share this financial information openly and to have the conversation. What will it mean if we add 3 members? Somebody wants that because that's their estimation, because they're overburdened. Is there another way that we can distribute work more evenly? Or is it possible to navigate this by just hiring 1 person? And the last thing I'll say is the employees. The idea is you want as many people to be members as the business can sustain. and that employees it will mean that there will be costs, maybe less costs because there's not, maybe you don't pay them as well, but you don't want to get in a situation where you are benefiting from the exploitation of workers who are not members. That's one of the principles of worker cooperatives. You want as many people to benefit fairly as possible. So those are some reflections on this challenge, but the challenge is going to come up in your cooperative if it hasn't already, or some people will say, let's bring in more people, and some people will say, no, we can't, and this is practice in navigating that conversation.
Then I think this one we've already decided, we've discussed enough. When do you add a new member? You need to consider the cost implication. That is one thing. You do not just see, okay, we have this amount of work. You need to consider, can you be able to pay this new member for the foreseeable future? Sawa sawa. Do you have enough work that can guarantee all your members' work and even overflow and spill over to these new people that you want to engage in? Sawa sawa. So that is very critical when you're deciding when or how to add a new member. You need to consider always the cost, and do you have the work to give this person, because they want to join because they need a job. So if you cannot provide the job, you should not add that new member. And of course, if you cannot pay them, you should not add the new member. Yeah. So I think just to remind ourselves what the worker co-op difference is, more is not always better for a worker cooperative. For a SACCO Agri-Coop, the more the members, the better the members. And I hope we've seen for a worker cooperative, the more the members, the higher the wage, the higher the expenses, the lower your net surplus at the end of the year. The minimum number of people allowed, tuko na COP officers hapa. Minimum number of people allowed to register a worker cooperative ni wangapi? Yeah? Monica? 10, eh? So ideally for Kenya, minimum number of members is 10. I know it's still a debate ongoing. Even I know there's a policy. I don't know if Mike is here. Mike is here? Okay. Mike, tuambie policy ile ya waka cooperative imefika wapi? Na how many members, minimum members are proposed?
So, I mean, you're referring to the national...
Yeah, policy on work.
So basically what happened is of the minimum membership for cooperatives. And the last version we had access to was they are trying to increase the number from, who knows the current number of minimum membership for registration of a cooperative members? Ngapi? How many? 10. Yeah. So there was a proposal to increase that number to 25, which when you look at for worker cooperatives, it's like now an impeding aspect to it. But there've been a lot of conversation that they are looking at agri-based cooperatives, the financial cooperatives like SACCOs, but we've been trying to advocate and for the lawmakers that for worker cooperatives, it's not, I think Mary mentioned that it's not about the numbers, but the amount of work. So those conversations are still happening, and what also we are advocating is once the bill is passed, you remember there are different what do you call policies governing different sectors. For instance, the financial cooperatives, watu wa kahawa, watu wa chai, watu wa gani tena? So what we are also pushing and advocating for is so that we have a policy specifically governing worker cooperatives. And with that now, some of the issues that affect worker cooperatives will be able to be gotten into that. I don't know whether I've answered you. I was trying to give just a context of what we are in terms
Yes,
of...
yes,
Yeah.
you have answered. Thank you. So 10, eh? How yeah? Can you imagine mkiachia board peke yake na members wengi wanataka kuongeza mishahara, si ndio? Faster. Of course, it might take more time, eh? But more people might be more agreeable to the outcome. Give them the scenarios, eh? Tukiwapea 2-5, ukisema tuongeze watu, inamaanisha pia tutakuwa na loss. Eh? So, giving them that opportunity, you might even have, I found Moses taking you through, yeah? So there's something I think you're going to take through that's called meeting facilitation. No? I think it's Dr. Langat. Yeah. That's, you need to track, compare your prices to your costs. Are you growing? Are you expected to grow? Are your services priced correctly? I think one thing I would advise startups is that you do not price below what is in the current market. Most organizations make that mistake. Unaona mkate unauzwa 65, but wewe unakuja na mkate yako unataka kuuza 50 bob. Ideally it may look like a very attractive thing, yet you have not considered what are the total costs that have gone into this. Of course you can enter just almost at par. Unaweza hata shilingi 3-5. Si ndio? Unaweza 63 ama 60 bob. But do not really underprice your goods because it will have a very big financial implication. When you're trying now to remove the 60 bob, unataka bei zenyu zitoke 50 bob zifike 65. In one go. Sawa. Because sasa umefanya hesabu umeona the math is not adding up, yeah? Yeah. So you might choose to have this in place or not. You can have a price or costing calculator. It is good to develop a budget in the afternoon. We'll do a budget. I think that's the tool that I will. And so on and so forth. Hizi tutaziangalia possibly in the afternoon. The key ideas, what have you learned? What questions did this raise for you?
So that good, but good thing is that I'm sure that you've learned something. See, you've learned something, not just, not something. You've learned everything. Is it something or everything? A lot, eh? Yeah, so we have a lot of work to do when we go back to our cooperatives or back to do whatever is expected of us. And we are still learning, we are still building up on that. So that means now in the afternoon we'll now dive into the next module, which is on what? Financial management. Eh? So it's financial management in what? Okay, sorry, in the afternoon. Let me just say that in the afternoon. Yeah? Management in? Or in the afternoon? In action. Yes, it's in action, not in the afternoon. Okay, so I think, Mike, you have something?
A cooperative member, Alan Mashari, just...
Oh, looks like someone sent Alan in absentia. Okay, so but you have iko anaona inatumika. Do you have a laptop here? Iko, thank you. We have one, thank you. Laptop?
No, watu waende lunch kwa kurudi mapema.
Okay, so president says guys go for lunch, come back early. Deputy? Anaongea hawezi ongea now. Okay, what about our disciplinarian? Do you have anything for us?
No.
No? Timekeeper, do you have anything for us?
You have 59 minutes.
Make sure you say hi to someone. Yeah, naona mpaka deputy anaanza to stretch. Ni vizuri by the way. You can even also stretch. Yeah. Okay, Energizer kuna kazi atufanyie lakini ni sawa. So Energizer will task you. In the afternoon we will task you. Yeah, to do something for us. Okay, so with that then, let me take it back to, unless there's anything from the facilitators. Rebecca, you have anything? Mike, anything? Dr. Gwei? Mike testing. Ads wameweka mingi sana hivi.
zilitoka according to
Power, mpeni power. Nikitaka isifike pahali kama elected board, for example, people have a lot of questions. It is good to have these records in place. Wakiwauliza, hapa tunaona mmesema meeting facilitation ama a certain expense. How did you finally arrive at this expense? Na ukiona cooperative yenye haitaki kushare its finances, it is a red flag. Sawa sawa. Ukiona mnaenda AGM, for example, and your leaders never want to share with you the finances, ama wanaekanga hiyo agenda ikiwa ya mwisho, lete mwanajua mmechoka, mnataka tu kupitisha budget kama mmeenda nyumbani. It is a sign of a red flag. You will be given these documents, you interact with them, you are given a chance to question. Sawa sawa. And of course, expect the same in case you're in a leadership position. Expect questions. See ati watu hawakutrust, but you need to build an understanding among yourselves. So that's why you do those records. Of course, informed decision making, I've already explained that bit. Then kuna compliance and reporting. Tunajua as a business enterprise, lazima mfanyiwe audit. Sindio? If you do not have the records, unaona hamtakuwa compliant as per the legal requirements in keeping your books of account. Sawa sawa. So it is one of the requirements for you to be compliant. And at the end of the year, kama mjaweka records, ndo mtaenda AGM, unashindwa unapresentia watu wako nini. Kwa sababu hata ukumbuki this payment. Now, in case they are looking at projects or work or adding a new member, they might be more reliant, or they might be looking more into hiring someone with those interior design skills. That is part of financial planning. And of course, performance evaluation. This one ni kama ile example ya you have a target of 2.5, you manage to get to 1 point in the same field, achieving. Sawa sawa. So that any growth is not just growth. You need to grow at a level that you are competing with yourself. You are improving every single day. Remember, contribution. Kama ni share capital, you need a record showing that these are your shareholders.
Yeah? We have talked of revenue, that is expenses. And our madam here have said that if the manager moves to look for a contract, maybe you have used our money. Who has approved that money? Is it the members, or you can just come and withdraw the money and use it?
Ideally, when you are forming a worker cooperative or a pool, or you have a set of leaders, si hata mkifungua bank inaulizanga who are your signatories. Si ndio? And at any one point you cannot have one person operating that account. Sawa sawa. So by the time you have told the bank that these 3 people are our signatories, they are the ones who are allowed to transact on behalf of the cooperative. Sawa sawa. Kwa pamoja. And of course, kama cooperative, there are some expenses that you approve. See, I am hoping you've heard of this. You approve a budget every single year. Yeah? Once you start, every single year you will be expected to develop a budget so that it can guide your expenditure. Kwa pamoja. Mkisema you will spend this amount of money in terms of marketing expenses. You try and ensure whatever money you've spent is within what is approved. So that is if every time you need to do a certain transaction, you're calling all the members for that specific decision. Sawa sawa. This is what you approve as members. At that level is when all members are engaged and you develop a budget that ideally you are supposed to follow. Sawa sawa. In case you want to adjust that budget, another meeting is called to make budget adjustments, either to increase or reduce the expenditure items. Kwa pamoja? I hope you are answered. Yeah. Ndio muweze kumove as an organization. They are the leaders you've entrusted to make some critical decisions on your behalf. Yeah. So just this is just a simple example. Different businesses have different revenues and different expenses, yeah? So this is a very simple one, huh? You've looked at your sales, huh? You record all your sales and you realize in that day probably you've made sales of 70,000, yeah? Similarly, you need to record all the expenses and see that day, in that week, in that month. You can choose how often to do the report. Sawa, depending on how busy your organization is. Watu wako kwa sekta kama bakery ama inauza.
For example, invest in a company or buy its corporate bonds. You can analyze its financial statements. There are 3 important financial statements which complement each other. 1, the balance sheet, which is kind of like a photo of a company at a certain point in time. It tells you at that point in time what assets such as cash in the bank, inventory, or real estate that company has, and what liabilities it has, such as, for example, debt to suppliers. Subtract the liabilities from the assets, and you'll have the net worth of the company at that point in time, also called equity. 2, the income statement, also called the profit and loss statement, does exactly what its name suggests. It gives you a summary of the revenue and expenses generated by a company over the reporting period. 3, the cash flow statement also has an intuitive name and tells us how much actual cash and cash equivalents entered and left the company over the reporting period. If, for example, the management reports considerably higher profits, but there hasn't been that much of a net cash flow increase, you as an investor have valid reasons to be a bit skeptical. So, as a short recap, the balance sheet helps you determine the net worth of a company. The income statement shows you how profitable it is, and the cash flow statements tells you things such as whether or not the profit numbers are believable.
Business is making money. Sawa. Tukienda kwa balance sheet or statement of financial position, it shows you that net worth. Remember, ni kama a snapshot, a picture of the company or the business at a certain point in time. Sawa. It shows you all the assets and all the liabilities the organization has. And cash flow, meaning what is coming in and going out. So when you're going like mkienda kuomba loan, for example, and you will need to present all these statements to your financier. Sawa. Ama mnataka grant, ama you're trying to apply for something. One thing that they really look at is the cash flow statement. Sawa. How much money is going into and out of the business. That's why umesikia the video when it was ending that if an organization reports so much profit, yet you look at their cash flow statement, you cannot trace that money. Your eyebrows should be raised. And that is what really caused some giant companies zianguke kama Nakumatt. Mtu anaweza shangaa ujiulize Nakumatt na venye ilikuwa imekuwa kubwa, it was expanding. What really made it go down? And what really made it go down is they didn't have what we call liquidity. Liquidity ni cash. Sawa. They had invested a lot in assets, expansion. Sawa. And shida ya expansion, it takes time for whatever you've invested in to actually make you money. Sawa. So you have like 5 branches coming up at the same time. That means your finances are tied into long-term assets, buildings. Sawa. That you cannot be able to recoup money from them immediately. So what did that mean? They did not have enough liquid cash to meet their suppliers. Supplier anakuja, amesupply, lakini payment zake zina delay. Zikidelay, wanaanza kushuku the organization. What do? They stop their supplies. Wewe kama customer ukienda huko, leo umetafuta hii, umekosa. The second time umeenda supermarket, umekosa. The third time, nasema ni kama Nakumatt inaenda kuanguka sasa. Ama ni kama tax. Si unajua tukiangalia tu shelves, it will tell you. So what most companies or organizations have a difficulty in maintaining is their cash flow. Sawa. And cash flow is money that you can be able to meet unexpected obligations. Sawa sawa. So supplier alikuja, you are supposed to pay him in June, amekuja in May. Sawa, ama amekuja April, 2 months earlier. Do you have the finances that can meet this unexpected or even expected obligations when they fall due? Tuko pamoja? So that feeds into tying our money into things that can generate money for the organization. That is why for the Kigro recyclers, I was arguing, will it really be beneficial for them to buy a lorry? How much will it cost them for them to acquire that asset? And how fast can that asset be able to generate money from them? So when you are starting, it's not advisable to tie up a lot of your money in the long-term assets. Hizo mnaweza acquire pole tu. You require a plan to acquire. You need a plan to acquire what we call long-term assets. Hata sisi wenyewe ukitaka kununua nyumba na gari na shamba, si lazima ujipange. It takes time, you save so that you are able to do that. In the same spirit, as a business, kitu yoyote that requires a very big financial input, you need proper planning for it, so that you do not tie your members' money in a long-term asset that cannot be able to generate money for them immediately. So it is better you lease those equipment if you're not in a position to buy them or hire them. So ndo msipate liquidity problems, yeah? So we've seen this video. Now I want us to move from bookkeeping into what we call cost, maybe due to operating an office premises that you need to get. Ama kuna insurance probably that you need to pay. That is a fixed. Then kuna licenses.
Just stand still. Then wewe simama alafu stretch your arms. Just stretch your arms. Okay. Now bring them to the front. Self. I know you've never hugged yourself. Just say, "Oh." Then you sit down. No, atuendelee. Nasema kuna video. So kuna video. Now if you sleep.
Yeah, so the last example of variable cost packaging, in case you are engaged in packaging your products. If you add fixed costs plus variable costs, you normally get what we call total production cost. And you can have the production cost per unit. Sawa. So like maybe madaktari total cost of each item, yeah? So tukifanya price per unit minus the production cost, you'll get what we call a margin. Sawa. Mmeshaisikia watu wakisema margin? Yes. Our margin was this amount. Margin ni ukiangalia price, deduct your total costs of production. Are we together? Yes. Then, when you get your margin, you multiply it by the number of units you've sold. You finally get what we call gross profit. Sawa. Tuko pamoja hapo. So for example, I think there's an example next. So you can do this for a variety of products, depending on what you're doing. Like for the health, you can do, what is the margin for surgery, probably. Sawa. What is the margin for maternity? Sawa. What is the margin for CG servicing hospital? Ya pediatrician, ya pediatric. Sawa. You know product 1, surgery, product 2, and product 3. Domjue, in case you want to grow as a business, which one gives you the most or the highest margin? Sawa. Kuangalia hii project, how much margin is it bringing to us as a business? Domjue which types of projects are better for your clients, and you can try and focus and develop more of those types of projects. Sawa. Yeah, so ideally once you get the margin per unit, In case it's a unit type of business, you multiply by the number of units sold. If you're doing like a monthly report, you get the gross profit per. When you're talking about fixed cost tulisema, they remain constant, independent of whether or not the business is making money. Sawa sawa. When you're talking about fixed cost, gross profit minus fixed cost must always be positive. What do we mean? The money you're making must always cover your fixed costs. Otherwise, utakuwa mna run into a loss. That is a must. It is not a choice. If you are otherwise, you need to consider, are your fixed costs really fixed? Tuko pamoja? Do you really need that rent? Do you really need to rent out at this point when you're starting out? So those are some of the tough decisions. You'll need to sit down and see if this is an element of a fixed cost item. Do you really need it? Because you cannot do without it. So when I'm talking about fixed costs, when they're deducted from gross profit, they always must be positive. If you are not positive, you have some options. The first one is to increase prices. And when you're talking about increasing prices, you ask yourself the same things. What are your competitors charging? Do you have anything that differentiates you, that allows you to charge more? Sawa. Najiuliza, what is your total cost of production? Will it be covered by XYZ price, yeah? The other option is to reduce production costs. Sawa. Whether ni raw materials that you're acquiring, if you can get the same quality of items. The keyword is same quality. Sawa. Sijasema we compromise on the quality. If you can get the same quality but at a better price, why not explore that? The other one is increasing the units. Unaangalia how do you increase your sales? Kama ni projects, how do you get more projects? Tuko pamoja? Kama ni health, sasa hiyo sasa mnaombaka watu wakuwa wagonjwa ama no, not kuwa.
It's good that will never a person get sick for us.
Okay.
Do you wish that we get sick?
Of course. So that means people are made aware of the services we give. For like this week, from Monday up to Friday, we are repairing. Remember those people who have they are born with gaps here around here. So the whole of this week, that is what we are doing. So you see, that means people from all around will come.
Not a marketing, eh? So for them, they focus on that? On the marketing. Family planning. Amesema family planning. Yeah, I think I was just curious, yeah? But their main angle is quality of service. In case you ever need that kind of service, what will make you go to their hospital as opposed to any other hospital? And especially since most of you are in the service industry, that is a question you have no choice. You have to ask yourself. There are many movers, there are many foodies, there are many artists. Sawa. There are many climbers. What unique business aspect are you giving these people that will make them come back to you? Kama amna, si wataangalia the next alternative. So you need to look at what really can differentiate you and allow you to be higher at the value chain in whichever type of industry yenye mko. Masaa ya video sasa imefika. I know there's a button that is being pressed on the other side for the mic to stop talking and the video to start talking. It's the costs you will
Cost of goods sold simply means the costs you incur to get the product or service to the customer before taking into account your day-to-day operational costs or overheads. This is a really important number as it has a huge impact on your gross profit and an even bigger one on your net profit. Many business owners focus a lot of attention on sales, but a small reduction in cost of goods sold can have as much of an impact on gross profit as a large increase in sales. Understanding what makes up your cost of goods sold and some negotiation with suppliers for better prices can make a big difference. If you are a service-based business, you need to pay attention to work practices and job management, as these can have the same effect on your gross profit. This provides an opportunity to investigate differences and tighten up processes. You need to know how many labor hours you are selling compared to those you are paying for. Too many unbillable hours could be costing thousands of dollars when you multiply them by your charge-out rate. To find out more about cost of goods sold, download our free white paper on costing. Charge-out rate. To find out more about cost of goods sold, download our free white paper on costing.
It guides in pricing because you know how much you need to sell so that you can cover your costs, so that you can get at zero profit. If you get at zero profit, you know that you've covered all your costs. Sawa sawa. You know that you've broken even. Sawa sawa. And lastly, it shows feasibility. Ukiona hii biashara, you are not breaking even. You're constantly pumping money into it. It means it is not generating enough resources. Lazima mkae chini, you rethink your business plan. So ni canvas. Business model canvas, a snapshot of a business plan, but on one page. Yeah? If you are seeing that you are pumping in, you are putting in more money, but you're not even getting to the point of breaking even, you will need to ask yourself tough questions at that point in time. Which is the best strategy? Sawa sawa. Hapo ndo some people wanamwanga kudifferentiate kabisa. Mlikuwa movers. Mmeona moving haileti pesa ya kutosha. Tunaamua watu tujaribu fumigation. Tuko pamoja. It is still more or less, and of course when you are differentiating, you still have to maintain the same line. Msitoke tena sana and enter into a totally new field of business that you do not have a clue how that field of business operates. That's why kama wananchi niliwaambia you look into things like interior design. Hii ingine ya kutengeneza nje inaitwa aje? Landscaping. Unakaa, it's still in the same field, but you're trying to differentiate your product so that you're still in the same line of business, but offering a different aspect of it. Sawa sawa. So that has to do with that. Sasa hapa tu nitaonyesha formula. Sijui kama tutaitumia. Let me see. Okay, sioni kama tutaitumia leo. So, there's a reason why tulisoma fixed and variable cost. Sawa sawa. For you to break even, you have to cover all your fixed costs. Sawa sawa. That is why when you're looking at break-even analysis, what is on top is the fixed cost. And you divide it by selling price minus variable cost. Mbona tumeweka selling na variable pamoja? Because as sales increase, your variable cost also increases. So when you're doing this, inaweza kupatia how many units
a business's fixed cost of production, like rent, divided by how much you sell the product for, minus the variable costs per unit sold, like ingredients or materials. How much you sell the product minus variable costs is usually called your contribution margin. Confused? Don't worry, here's an example.
A lot of energy before it gets to lift off. Tuko pamoja? So kwa biashara, before mfike lift off, lazima you invest, reinvest, strategize, na mkifika per unit. And the variable costs are 120 per unit. Hizi si variable mnakumbuka, sales zikiongezeka pia hizo zinapanda. That is the definition of variable. What is a budget?
Lady, what's a budget? When you look for ladies.
Kwanza huko Nyeri. Nyeri.
Wamesema huko.
Chani wachokoze.
Hapa nyuma. Hapa nyuma.
Nyeri food deals.
You want to try?
Make sure that things run well. But we not close.
Okay. Thank you very much. Pia yapewe power. And more or less, unless kuna mwingine anataka kujaribu before tufunge.
Okay.
Okay. Mount Kenya.
It is a plan for spending and is the expenditure and revenue. Yeah, that is it.
Hii meza hii.
Iko na point. Thank you very much. And very true. I've had a budget is a plan. Kila mtu alikuwa anasema plan. Or what we call a financial projection, which is a detailed plan. Sawa sawa. So umesikia systematic huko nyuma that estimates your revenues and your projection over a certain duration of time, which is normally 1 year. Sawa sawa. It is very rare you get a budget that is for 2 years. Sawa sawa. Why do we do a budget for 1 year? Because you can only predict up to so much. Tuko pamoja? Predicting beyond a year is very, very difficult. You use your past performance, use what the market is happening to try and estimate what is your potential revenue, what are your incomes, what will your sai most cooperatives are in the budget preparation period. So tuko November, between October to December, it is the time when cooperatives prepare their budgets. So they are doing 2025 budgets. So that wakiita AGM members will approve budget. So that when they are spending, they have the authority of the members to spend those finances. Sawa sawa. So it is a financial projection that shows a detailed plan of your estimated revenues and expenses over. And we have different types of budgets. Hata kwa bomba, you employ budgeting, but hamjuangi ni budgeting mnafanya. Sawa sawa. We have what we call operating budgets. Sawa sawa, day to day, but we define each of them as they come. We have capital, we have cash, and we have member benefits budgets. Those four are very critical for a worker cooperative, for you to have a budget, for you to estimate how much will you spend on operations, how much will you spend in terms of capital purchases, how much cash do you need to maintain for you to sustain and meet your obligations as they come. And of course, your members need to benefit for being part of the cooperative. How and by how much are they going to benefit? Yeah? One cannot exist in isolation. If you have capital, you need operating. Sawa sawa. And each one manages a different aspect. Venye mmeona ya. Kuna ya members, kuna ya operations peke yake, kuna ya pesa peke yake, cash matters peke yake, na kuna ya capital. We'll define all of them. And together, they create a picture of what the financial plan of the business looks like. So kwa hizo tatu, tumeona kuna operating plan when you're trying to do significant or purchasing long-term assets. Sawa sawa, kutoka land, buildings, machinery, etc. They fall under capital. Something that you will purchase that you will use for more than 1 year. Sawa sawa, that falls under capital. And finally, kuna members. Among them, which one do you think is most important for your cooperative? Nimesikia capital, nimesikia cash, nimesikia operating. Sasa ni kama nitawapea mic watu wanielezee which one do you think is important and why? Kila mkono mwa Kenya. Haya, hapa mnasema which one is important? Operating. I had cash somewhere here. Who had said cash? She had said cash.
Nadhani ni operating kwa kikapu because we have to purchase the materials for us to get the cash. So operating, I think we have to dwell on that so much.
You have to really look at operating.
Yes.
So you think it's the most important?
Yes, for us.
To you guys, Yes. Aya, tuendelee. Capital? I think it's capital budget. Watu wa cash wame-retract. Wameogopa. Cash nilisikia imeza. Sasa hivi wameenda chini. Aya, hakuna mtu wa members? Anyone who is for members as the most important budget? Members benefit? Okay, so hao wanaweza ngoja. Nimeambiwa members can afford to wait. Cash wananchi walikuwa wamesema ni venye they have decided to take, mwambie hiyo 200 itoshe sasa. Na nataka kukula nyama na matoke every single day. So you need to plan venye nyumbani tunajaribu ku maintain a certain budget. I was using 200 metaphorically. Hapa it feeds directly to your cash flow statement. It ensures you do not have shortages. Kwa pamoja, shortages ndo zinaribingi the reputation of the business. When you have shortages, unaimagine mtu amefanya kazi, jioni ana expect wananchi wamlipe 800 yake. Fundi amemaliza kazi, unamwambia ende nyumbani bila pesa. Can you imagine such a scenario? Ama imefika ni Saturday, mnawalipana. Saturday unawaambia ngojeeni Monday. Hata kwako they are giving their service. You cannot ideally let them go. Similar to artists. Kama watu wamekuja, wameenda shooting. Unajua kuna ile pesa mnapeananga kama fares, sijui kama mnapeananga. Well, the shooting is going on. Sits there. Mtu asikuwa anakuja and shoot every single day, yet they do not even have finances to get them from home to the shooting venue. Then ukiona ameanza kupotea, you are there throwing during this filming process. You need to consider, you need to maintain some level of finances in terms of ferrying your members to points of work that are not their regular workplaces. So even in the project, you need to do a cash budget for that specific activity. Aya, ya mwisho ni member benefits. These ones directly, there's direct value to the members. So, for example, simnasikianga cooperatives inakuanga na vitu kama trainings. For example, if you see some skills are lacking in your members, instead of looking for those skills outside, why not develop or train yours? Tuko pamoja. And it is a budget item, and it is a department. Ukienda kwa sako yote, agricultural cooperative yote, utasikia watu wanaenda training. Kwa sababu cooperatives, we have a principle on cooperative education, training, and information. That is why cooperatives have to, it is a must for them to have budgets for member development or member training. So normally we do not believe you can grow from outside. The easiest way for you to grow is to grow from within. So mukiona kuna member wenyu kama SACCOs, they spend a lot of money on credit management trainings. Kwa sababu wanajua if we do not manage our credit well, we lose as a business. So kama kikapu, hizo skills za kushona vikapu, if there are ways of making those skills much better, that is an area of spending money you should consider. Na wananchi similarly, kama ni mafundi, unajua which skill they need, you can balance. Right now I'm seeing a lot of buildings, ukiangalia on the outside, they have certain patterns. And it is all in the construction. How work of structural engineers. Is that one. Now because you're looking at the service, unataka when a person comes to you, ukimjengea nyumba ama mkiwajengea nyumba, you want them to come back again. And people are impressed with very little things in life. Hiyo tu atashinda akitishia rafiki zake wote. Unaona hiyo kuta? Because before mtu anaingia, the first thing they get is the image, the external image of the building. After that, kuna interior. Sindio? And of course, kuna landscape. Kuna wenye tu they fall in love purely with the landscape. So ni kujua which of these has the best margin probably. And do you want to invest some money to develop that skill much better as a worker cooperative? Yeah. Now, I want us to go to the group activity. Laptops ziko on.